With the BIP 148 soft fork pending, the Bitcoin marketplace is skittish. New and veteran users alike aren't sure what's happening or how it's all going to play out, and everyone has a lot of questions. In this video, we're going to review the BIP 148, the beginner's guide to a user-activated soft fork, or a UASF, from wearecoins.com. And we're going to answer, what is BIP 148 and what's happening? What's the difference between a Bitcoin hard fork and a Bitcoin soft fork? And how do you need to prepare yourself for BIP 148 if there is going to be a split in the blockchain to keep your Bitcoin safe? All of this and more, let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins, where we are talking about Bitcoin and blockchain technology so you can have the information to make decisions in your life and just simply know what is going on in the world of Bitcoin, financial technology, and blockchain technology as well. And in the world of Bitcoin, we have a lot happening. We've had really the market go down and sideways, and people just not being sure what's going on. We were on a roller coaster ride going up and up and up, and there was all of this money coming into the cryptocurrency space, probably for a lot of different reasons. You know, it was coming into Bitcoin, it was coming into Ethereum, it was going into all of these different ICOs, and by and large, I would say it really still is, although as we're pretty well aware of, there's been a drawback in the overall market capitalization of the total amount of money that has been put into the cryptocurrency space. With that being said, it seems as if we've hit somewhat of a stable ground right now, but we're definitely not out of the storm yet. And where that's really focused around is in the Bitcoin space. The biggest coin, the first coin, the coin that has really sparked off this fire and this debate. You know, and what is this debate around? This debate is all around the centralization and the way Bitcoin is processed, the way it gets upgraded, essentially the way it's governed. And, you know, August 1st is an important date because August 1st is when we have the BIP 148 user activated soft fork activating SegWit from all the different users around the world. And there's a lot of, you know, uncertainty around this. What's going to happen? And, you know, through all the noise and through what everyone is saying about the BIP 148 and the user activated soft fork is that this could lead to a hard fork. And I think that really nobody wants to see the creation of a hard fork. Maybe by necessity, some people are willing to allow that to happen to see, you know, their end goals met. But the hard fork and the hard forking talk is really scary for most people, and it's really scary especially for new people that don't completely understand the technology and what's happening. Maybe that's you, and maybe that's not you. And even if you understand the technology, there's just so many questions about the implications and what can happen. And generally speaking, what people are fearful of is that there will be a hard fork and that there will then be two different Bitcoins created. I don't know, a Bitcoin classic big block coin and then a Bitcoin, like a Bitcoin SegWit coin, or it remains to be determined what these will be called. But people don't want to see two different Bitcoins because, like with Ethereum, we had a Ethereum hard fork, and we had and ended up eventually with two separate Ethereum coins, since the main Ethereum, the number one Ethereum, the new Ethereum forked and changed its blockchain from the Ethereum Classic, the original Ethereum, which is why they call it Ethereum Classic. And no one wants to see that break between Bitcoin because although everyone says there's no real way to destroy Bitcoin, if you ask me, the path that's most likely in terms of destroying Bitcoin is by splitting Bitcoin. And so I think there's a huge economic incentive for everyone to see that happen. I don't think anyone wants to see two different Bitcoins. And this is a crazy game of chicken, which through yesterday's video and what's happening with the SegWit 2x, it's going to be really interesting to see how this plays out, because unlike a regular game of chicken, we have a phone call coming in. Unlike a regular game of chicken, this is a game of chicken between not just two different people coming at each other, but this is a game of chicken between thousands and thousands of people all colliding in different directions. This is like a game of chicken bumper cars with your bank account strapped to the front bumper. So that's a sort of interesting visual, and let me know what you think about that visual in the thoughts below. But with that being said, there's a lot to go over to get into the details. So why don't we pop over and look at the market and go from the market to the news, and let's discuss. Okay, so let's see here. Waiting for this all to pop in. And so here we are at coinmarketcap.com looking at the top coins courtesy of coinmarketcap.com by market cap capitalization. And so we see a lot of red across this board. And don't let this confuse you with just looking at the past 24-hour data, because in the past 24 hours we see that Ethereum is down 6%, and Litecoin is down 5%, and Ethereum Classic is down 9%. But make sure you're taking a peek at these different graphs along the way, which are really showing that over the past few days, while Bitcoin is down 2%, it's really going sideways over the past couple of days, and it is down over the past 7 days, right? And so we know that we've been down over the past 7 days, but here again, even though Ethereum is down 6% from a day ago, it's really above the same even playing field over the past couple of days. And so my whole point with this is saying, let's not get caught up at just the single 24 hours, and let's make sure that when we're looking at this data, we're looking at multiple data points. When we look at the high-level analytics, we're pretty much where we were yesterday with the total market capitalization of 82. Not necessarily going up, not necessarily going down. Volume also around the same, $3.4 billion, and the Bitcoin dominance at 46.6%. Bitcoin holding strong around that 2350 level. And Litecoin strong at the 2% parity. So really interesting how that happens. I think most of these coins are undervalued. All these coins are undervalued. Dash has major updates coming up. I think Monero has some major updates coming up. Ethereum definitely has some major updates coming up. And any day we could have major news, and this $2,300 price for Bitcoin can definitely go past that $3,000 mark that we saw just a few weeks ago. But if that happens, today is the 13th, I don't think that's going to happen necessarily before the 1st, because in the news today, what we have is the BIP 148, and what we have is the BIP 148 being activated in just a few weeks on August 1st. And so I wanted to review this guide that talks about the user activated Softfork and BIP 148 and what that is and what that means, so we can have this information, so we can have this knowledge, and we can understand how is this going to affect any of the Bitcoins that we may or may not own, and that we may or may not own, and that of which those private keys we may or may not even control. Right? So let's dive into this and let's learn about some more information. So this, again, this is just uncertainty no matter what. Even if this isn't FUD, even if this isn't fear, uncertainty, and doubt all packaged together, this is still uncertainty. And part part of what we have with this user-activated soft fork is that this protocol, this agreement that on August 1st, all of these computers are going to come together, all these mining nodes are going to come together and all activate and signal for this BIP 148. And so the Bitcoin core full nodes comprise of more than 95% of the Bitcoin network, and they're also susceptible to this issue. And which creates a security risk and a vulnerability that SegWit is actually going to cover up and it's going to fix, so it's not an issue anymore for Bitcoin. In addition, the SegWit is going to solve all sorts of scaling issues as tested across Bitcoin. As we see already activated on Litecoin, it will then be activated on Bitcoin, potentially allowing Bitcoin to expand to significantly higher numbers of people, because then those transaction times will be increased, the costs will be decreased, and a lot of the smaller issues will be taken care of as well with the BIP 148 and with SegWit. And that's with any implementation of SegWit. The issues that we were seeing with the SegWit 2x is that the SegWit 2x also increases the block size. And from what we understand about increasing the block size and that making it more costly to then run a full node, or more involved to run a full node, then fewer people would be able to run full nodes. And if fewer people run full nodes, then the security of Bitcoin would be decreased, because the more decentralized Bitcoin is, the more decentralized a blockchain is, the more secure that blockchain technology is, versus hackers' ability or third parties' ability to infiltrate and to change the records of that ledger through either a 51% attack or some other attack across the network. So with BIP 148, again, it's a user-activated soft fork, UASF. So if you keep on seeing this UASF, it's United, not anything with the U.S. If you got some dyslexia there, it's like the United States Air Force. No, it's the user-activated soft fork that also requires miners to signal for the segregated witness. And so for technical reasons, it requires the miners to signal for SegWit as well. And signaling this does not mean that the miners support SegWit, but it's a signal that they're for their readiness for these miners to enforce the rules. So beginning August 1st, the nodes that enforce the BIP 148 will reject any block from the miners that do not signal for SegWit readiness. And so that's sort of the D-Day of which the many people are going to change how their system operates and what rules that their Bitcoin, the code for their mining code, which is one of the nodes on the many nodes that's creating consensus, that's creating the longest chain, the rules that they're going to follow, that they're going to accept as the Bitcoin's longest chain. So we are talking about soft forks and we're talking about hard forks. And so what's the difference? So a hard fork is a permanent divergence in the blockchain. This commonly occurs when non-upgraded nodes can't validate blocks. So this is a hard change where the rules are completely different, and in no way do the two different chains agree with each other or see eye to eye on which one is valid. A soft fork, on the other hand, is a temporary divergence in the blockchain caused by non-upgrading nodes not following new consensus rules. So soft forks play nice with each other on the blockchain and can still all exist with roughly the same main chain, is how I understand it. And a hard fork is a complete divergence and a permanent divergence from that chain, and then splitting into creating two different chains. And so the soft fork and the user-activated soft fork part of Bitcoin, which is the BIP 148, is just a soft fork, and it's not in itself a hard fork situation. And so in this article, there's all sorts of information that gets into more detail about why BIP 148, going over this detail and the problems it's going to solve. And it goes into a lot of the people who are optimistic towards the BIP 148, and it goes into those who are ambivalent toward BIP 148, so forth and so on. It talks about those who are pessimistic toward BIP 148, and so in this list it has Greg Maxwell. I believe that's someone who is pretending to be Satoshi Nakamura, and yeah, it's not Satoshi. And Greg Maxwell is not Satoshi. Greg Maxwell did not invent Bitcoin. I'm not sure to what degree he had an influence in the cyberpunk movement, or with that. It's just not something I've researched so in depth that I've got it that deep into the biography. But there is a lot of information out there where you clearly see that what this person is advocating for is a greater concentration of control, and for that control to be given to larger organizations and institutions, which is inevitably going to create a focus of power, a centralization of power away from the people, because that's why Bitcoin is strong, is because we want it to be decentralized. We want it to be spread out. We want it to be networked across as many people in many places in the entire world, because the more decentralized the Bitcoin blockchain is, the more decentralized any blockchain is, the more secure then that blockchain is for everybody who uses that blockchain technology. Others who are pessimistic toward BIP 148 include the Bitcoin Core Dev meeting, and that was the agreement through all the different miners. And again, we talked about the miners really wanting the big block size. And so this article really gets into a lot of other information too. And so what could happen on August 1st, which is about 2 weeks away? Well, if the miners activate SegWit before August 1st, 2017, then the BIP 148 will not be enforced, and all users of Bitcoin will remain on the same chain no matter what client they use. If the miners do not activate SegWit, then there may be a chain split, and a chain split will mean that some users will see a different transaction set than the other users. And if the majority of miners, and it gets a little bit confusing, but if the majority of miners enforce BIP 148, then these chain splits will only be temporary. And eventually, all the clients are going to see the same chain, and then SegWit is going to activate for everybody, and then everything will be copacetic again. But if the majority of miners do not enforce BIP 148, and the users that enforce BIP, then the users that do enforce the BIP 148 will diverge from the users that do not enforce it, and then there will be a chain split. But the way this is all worked out is that there's economic incentives for both parties, and there's economic disadvantages for both parties. Especially those in the short term who are focused on the moment, and those who are focused on actually mining the network. And with that, it's going to have a huge effect on the supply and the demand, and how the miners actually essentially put the money where the mouth is in terms of the decisions that they want to make. But in terms of how do you prepare if there is going to be a chain split, the most important thing that you can do is, on one hand, if you want to get technical about it, if you want to get a little bit geeky about it, is that you can run your own network, your own full node, and you can, signal what you want to signal in one way or the other in terms of whichever protocol that it is that you want to support, not necessarily BIP 148, but even if you want to support SegWit 2x, you can run your own full node. And then you'll be able to make your own voice, have your own voice, make your own vote, have your own decision be heard, even if that does mean that there would then be later a bigger block size and it'd be more difficult for you to run your full node. but that's neither here nor there in that case. But yeah, running a full node, some people are asking, is everyone supposed to run a full node? Is my grandmother supposed to run a full node? I mean, that's sort of like asking if your grandmother should get a cell phone. I mean, if this is 1994, then maybe she shouldn't get a cell phone. But if it's 1995, having the $100 track phone in your car and in her car, if the car breaks down, if she doesn't have a cell phone, and if it's 2005, then she should absolutely have a cell phone, right? She probably has an iPhone, and she probably has Facebook to keep in contact with her family. And so will the technology evolve to a point where more and more people can have a full node? It's possible it can go in that direction, just like it's possible it can go in the other direction, where only the richest, most powerful corporations will be capable of handling that sort of risk with that level of resource required. And this is a decision point. This is a point. This is a bleep on the radar that's causing mass chaos right now. But in the future, people will look back at this and will study this and will look and understand what happened, why it happened, how it happened, and will laugh and drink champagne in their Lamborghinis perhaps about the old times and us getting through these times, of which a lot of people are super stressed out about. Separate from running your own full node, without getting to if it says it super clearly in here, but essentially running your own full node, you're going to be creating and storing your own private keys, and that's essentially the gist of it. Is that you want to be able to hold and store and control your own Bitcoins with your own private keys. That's the critical part here, and we're going to talk in a minute about which wallets your Bitcoins are presumably safe, and that's going to be in this information as well. So possible scenarios resulting from the BIP 148. So BIP 148 requires support from the economic majority, particularly exchanges and wallets. And so if this doesn't occur, then BIP 148 either shouldn't run or it should be abandoned, right? There's also strong economic incentives in the Bitcoin system for nodes to cooperate and maintain consensus to prevent chain splits. If nodes are mining blocks that are not the longest block, if they're mining blocks that are the least popular block, then they're not going to get rewarded with the Bitcoin rewards of possibly solving that block, or not only that, or they could get rejected from being able to solve on the block. And so there's a strong economic incentive in the system for nodes to cooperate and maintain the consensus, and they don't want the miners don't want a chain split as well, I would say, in most cases. So miners could opt out to ignore the BIP 148 rule and attempt to split the chain, but this would require a majority of miners who would then be out of consensus. So if the majority of miners choose to be out of consensus, then again, this would create the economic disincentive. And if a majority of hash power follows BIP 148, then all the nodes will follow the chain regardless of if they're running 148. Non-compliant blocks will be orphaned, and all SegWit nodes will eventually activate SegWit. And then if a minority of hash power under 51% follows BIP 148, the nodes running BIP 148 will be fine, but those not running BIP 148 will be out of consensus, and the rest of the economy. So in this scenario, the more of the economy that runs BIP 148, the better. And so we'll just have to see what happens in that case and which way that goes. But miners, according to this, are going to find it difficult to sell their coins, leading economically motivated miners that are to start enforcing the BIP 148. So if the miners are mining the not Bitcoin block, the not SegWit block, and nobody wants those coins, then the miner is going to be mining something that nobody wants. And then they're just going to have to go to start mining the coin that people do want. And, if they do that, if people want the SegWit coin, they're going to mine the SegWit coin so they can have the SegWit coin so they can sell that SegWit coin so they can get paid, because they have their political ideas and they have their, perhaps their long-term goals and their long-term vision, but short-term, it's really difficult when you don't have that reoccurring revenue for the month, especially when you're making as much money as some of these folks are. Cool. So we were talking about the wallets that will help you support BIP 148 and the wallets that will allow you to securely control your private keys. And we have a list of those here, some of them like Electrum and Ledger Wallet, Mycelium, Trezor, Jax, and each of these are links that have the statements from the specific companies that talk about that reference their vocal support for SegWit, for BIP 148, and allowing people to securely control both of their different Bitcoin private keys, both of the different Bitcoin private keys, if there does happen to be a chain split. And so if there is going to be a chain split and you have, for example, over here, we see this tweet from Trezor, from the CEO and IT architect at Satoshi Labs, who screenshots that the user-activated Softfork is on the Trezor beta wallet, and it's now up to you. So if you have Bitcoin inside the inside your Trezor, and then there's a fork split, you have the excuse me, you have the traditional Bitcoin wallet. That'll be the Bitcoin Classic, and then you'll have your other Bitcoin on the new blockchain, which is the Bitcoin user activated Softfork BIP 148 wallet. So then you theoretically will be able to, if you have 1 Bitcoin or 10 Bitcoins in your Bitcoin wallet, you'll then have 10 Bitcoins or however many Bitcoins in both of those wallets. And then through the different exchanges or shape-shifting type companies out there, you should be able to shape-shift the one coin to the other coin as soon as they have those features set up. And then if one coin sells off and everyone's selling off their Bitcoin Classic and everyone is selling off to the Bitcoin user-activated 148 Bitcoin, then no one's going to want the Bitcoin Classic, and that'll mean that the Bitcoin SegWit will be the longest chain, and then the Bitcoin SegWit will be the single coin. And again, if you have your Bitcoins in both places, no matter who wins, you'll have your Bitcoin in that place. And then, if we end up with one chain, then I think a lot of people are then expecting the price of Bitcoin to then skyrocket, going over that $3,000 mark that we were just at not too long ago. And so that's how that system would work. And I would imagine that each of them would be slightly similar, but we see Jax is saying that they're prepared to support Bitcoin's coming change, and that they support both SegWit 2x and will default to BIP 148 if needed, letting us know the Bitcoin is secure. Ledger giving similar information about the user-activated soft forks. And so you'll be able to transfer these coins back and forth. You're going to have both coins. You'll be able to, put your money where your mouth is, or just keep your bets placed on both, because no matter where the roulette wheel falls on the one coin or the other, you could have your money in both, or you'll be able to switch from one to the other. Really do whatever you want. So where do we go from here? What do we do? As a holder or a long-term investor, again, if there's a chain split, then you're going to have equal amounts of both coins. You're not going to really have to do anything. And if you want, you'll be able to sell one for the other. If you're a trader, then you're going to need to find an exchange that supports each coin, preferably an exchange that supports both coins, so you can have better access to the liquidity of going between the two. Traders may have an opportunity to trade coins from one side to the other. This is what we were mentioning a second ago. And if the exchanges support both chains, then it'd be really easy to do that direct transacting from one to the other. It would be really interesting to see that money fly, and just expect, if you are a trader, major volatility. And if you're not a trader and you just want to sell one for the other, then maybe just, dollar cost average those sells, or I mean, there's all sorts of strategies. I'm not the trading expert. There's definitely other channels for that. What else do we have here? So if sufficient demand exists on the BIP 148 chain, it may encourage more miners to mine that chain, and that could again eliminate the split. So as the traders do go to the trading, if everyone's selling one coin for the other because they just believe that the SegWit is the future, for example, then it's just going to encourage the more miners to then mine what would perceivably be the real Bitcoin, because that would be the Bitcoin that more people are demanding. And so it's going to be a teeter-totter with a shifting of the control. It's going to be based on the mining power. It's going to be based on the market demand for each of the two different Bitcoins that will pop out. It's going to be the user demand. It's going to be, so many variables. It's going to be a crazy ride. So again, huge caution. Everyone who's trading the legacy chain could be reorganized without warning. Caution on the BIP 148 chain, as if the interest is insufficient, then the BIP 148 also could not hold long-term value. So if you're trading either way, either one way you could potentially lose all your money, and another way you could potentially lose some of your money, and that's not good in either direction. And beyond the traders, if you're not a trader but you're spending Bitcoin, the same sort of thing. If you're spending or receiving Bitcoin, all this information will be in the video, but I would say do not spend once August 1st hits, and that Bitcoin's in your wallet. Don't spend Bitcoin on it. Use your Litecoin for transactions, use Monero, use Dash, use Ethereum for the transactions, but the Bitcoin, just leave it alone until all this gets worked out and we find out which chain is the right chain, because until then, these things can get reorganized. There could be two different chains. Again, there's just a lot of different variables that can happen, even though there's good speculation about what will happen and what may happen. We could definitely be wrong. And so the surefire way to be right is to do nothing and to simply leave your Bitcoin where it is. And unless you want to make that bet, moving it all to the one or a portion of one to the other, just leave it alone and let the miners and the market figure this out. If you want to have your own voice heard, if you want to have a voice, then your options are to run a full node and or trade all of your new Bitcoin, if there is a chain split, into the one Bitcoin, into the Bitcoin that you believe in. And so those are your options for having your own voice heard. So if you're a miner and maybe you have an ASIC miner, a Bitmain Antminer, or maybe you're running a mining software one way or another, the BIP can be easily and cheaply supported by users, businesses, exchanges, wallets. Miners have to make a choice between one system or the other system. So, and that directly impacts their revenue. They only have so much resources and they can split it evenly, or they can just pick one or the other because they're both going to have different rates of return and how much money the miners are making. And then we have the pools that are supporting the BIP 148, so then you can be a part of these pools that are supporting BIP 148 and SegWit. So as they're mining that network and together that pool solves a block, then you'll be a part of part of the miners who get rewarded for solving that block. Okay, so this has been a lot of information. So in conclusion, if BIP 148 is successful, then little or no action is needed on the part of users, and there's nothing you have to worry about. However, around August 1st, be extremely cautious. Spending Bitcoin, receiving Bitcoin, or just any sort of transaction in Bitcoin, because you could be working on a faulty chain. You can be giving up valuable coins without recognizing it. You could be sending, Bitcoin from one chain, but accidentally be sending that Bitcoin from both different chains, unintentionally. So, and most users will likely wait until they get more information, until more information is available. And that's what we're recommending that most people do as well, is that there's going to be buying and selling opportunities from now up until August 1st. As we get closer to August 1st, we're going to see a frenzy of activity. It's going to be really interesting to see the volatility, as some people want to get rid of their Bitcoin and other people want to really get that Bitcoin, because once that fork happens, if and when the fork happens, even if it's for a small period of time, through a small fork or through a hard fork, then having both of those Bitcoins are going to be an opportunity in the marketplaces for a lot of people to make a lot of money, really position themselves in terms of having that opportunity. And for you, depending, you got to make decisions on your own. None of this is an investment advice, but it's important to know that the August 1st date is coming up, that there's the potential of a hard fork from this soft fork, that this is going to get worked out through both the market and the miners and the market dynamics of how much Bitcoin is worth, and how many Bitcoins these miners are generating and what they're able to sell them at. And so it's going to be really interesting to see the economic incentives. It's going to be interesting to see if they put 2 different Bitcoins up on coinmarketcap.com. And it's going to be really interesting to see where the price of Bitcoin goes after this is all worked out. Hopefully, a week or 2 after, but it really remains to be seen. And we'll talk about it as the new developments happen. So thanks for being a part of this video. Thanks for sticking around. Thanks for going through all this information and checking out this information with us. What do you think? I know I ask for a lot of engagement in the comments below. Share your thoughts, tap that like button, and I'm glad that together we're minting coins.